Hey everybody, hey traders. Chris Pulver here. It's just after 2 p.m. We have FOMC minutes coming on. I'm actually going to update this 2 p.m. Eastern time. Going live now for FOMC minutes and final hour combo. All right, so I'm going to go live. Usually I'm live at 3 p.m. for the final hour, but I figure it was prudent to come on now when the markets have just gone absolute face-melting rips from lows around 5,000 to a high of 53.95. Nearly a 400-point swing. We have about a 9% intraday move in the S&P, a 10.3% intraday move in the Nasdaq. This is the short squeeze heard around the world. Things just keep getting more interesting. So just following the real-time news, what we had today, you can just see all these red posts. Go back here. This is where it all kind of started. This is around. I mean, I've got a big price action surge around 1:15 p.m. Eastern time. So this is all 1:30, 1:30, 1:30. I'm trying to go back in time. Here is trader seeing little chance of a rate cut in May, sharp repricing after Trump pauses big tariffs on countries except China. There should be another. I think I've got a screenshot here. Yes, this is the first thing I saw today at 13:19. So 1:19 p.m. Eastern time. I'm showing the 1:15 candle. So you can see my screenshot here. This is Trump raising China tariff to 125%. 90-day pause applies to reciprocal and 10% tariffs effective immediately. Authorized a 90-day pause on retaliating countries. So now we play catch up. Trump announces 90-day pause on reciprocal tariffs. We actually had, what's interesting, we saw that as fake news earlier in the week, and now it's official. So interesting leak. Obviously, price went way lower yesterday when we, had the highs and faded all the way back down. And then I'm just going to continue to kind of run up here and to find some major headlines. Traders see a little chance of Fed cut in May, sharp repricing after Trump pauses big tariffs on countries like China. The world is ready to work with Trump. China heads the opposite way. World Trade Organization on U.S. and China trade tensions. Preliminary projections suggest that merchandise trade between the two economies could decrease as much as 80%. That's a big deal. W2 on U.S.-China trade tensions, division of the global economy into two blocks. Basically, China, U.S., and whoever aligns with each party could lead to a long-term reduction in global real GDP by 7%. Thought that was it. I mean, again, like none of this is good, and I don't even know the numbers honestly. What started off as like 34%, then was a double down. I think we're 104%. They came back with 120 something percent. We did again. I'm not even going to pretend to keep track of the numbers here. But it's like we're pausing with the world and we're doubling down and reciprocating or retaliating with China. So the tariff level will be brought down to a universal 10% while negotiations are ongoing. Higher tariff because China prudently decided to retaliate. Raising duties on China to 125. Countries who do not retaliate will be rewarded. So Mexico, Canada, 10% tariff. Besant reiterates, we have been overwhelmed by allies' response. I expect partners to come with their best deal. Trump created maximum negotiating leverage. Yada, yada, yada. Tariff change was made because of countries contacting. It was a processing problem. 90-day pause because Trump wants to be involved. Gives time to negotiate. Uh-huh. Uh-huh. This pause is not because of the market reaction. Uh-huh. Sure. So I don't know. I mean, we can call this whatever we want. We can call this the art of the deal. You can call this Trump flinching. You can call this prices need some type of good news. The silver lining is that if we can get rid of the tariff tantrum for a moment, the market can forget about how bad things could be. You can see the price right here. Now, I'm still not believing that this is a rip to the upside. I mean, obviously today is ripped to the upside, but having this run right back into this gap right here. Now, I mean, what's insane is I'm gonna have to go down to a much smaller time frame and look to see. Okay, so if we break this channel, if we have this little range right here that's been broken, are we actually looking at some type of like sharp bottoming pattern? Is this going to be a push and a pause? Does the pause actually have more upside? Or is that pause going to not really be a pause, but just a surge into major support and resistance? And I mean, I could see this market still pausing at some point. But this is not the type of move that you want to step in front of. This is not time to be a hero. I've had a ridiculous swing in my accounts today. I mean, I was down right here. This figure was around 225K. Well, I guess it was more than it'd be about 240K because right now I'm showing a 228 to 225 gain. So I was in the red about 240K, all right, which is right around 6% for my accounts. So I'm down 6% going into today's trading. Well, I'm essentially flat. I'm break even. Okay, fine. Also, I mean, this is going to be a good opportunity to hopefully see if price can hang on to these levels and even just come here and pause, or the melt up continues. That's okay. This took a shock to my hedges, which is fine because I'm still going to hang on to those. I'm still up like 25 plus grand on hedges. They're not done yet. Those are hedged out to August and December because I don't think this noise is settled yet. But on a positive note, I'm getting some big swings in a lot of my positions. So some of the pressing expirations that I do have right now, Tesla, I need Tesla to stay above 247.50 by tomorrow, and it is. So we're right trading at 261. I'm not going to get cute with this. I could roll this out one more time. I am going to be sitting on Tesla. Let me check my break even here. I should be up like almost, I think it's $6,000 or $8,000 on Tesla. Let me double check that. Tesla. Okay. Chart alarm's going off. I'll check that in just a second. Willing to own. Okay, ratio spread. I took some assignments. Okay, so my break even on Tesla is 224.28. 224.28 minus 247.50 times 300. So up about 7 grand. So if it stays above 247.50 tomorrow, I get it called away for 7K. I mean, premiums are pretty high. If I rolled this, let me take a quick peek here. I don't know. I know earnings is coming right up. I don't want to be silly here. That's 7K I'd like to have. That's buying power I'd like to have. That's more profits I'd like to have. Take it, stash it away, and keep building. So let me check on a couple of positions for my Tesla trades here. So there's my shares. There is my 247. Right now, if I let it get called away, that's fine. If I look to roll it, I'm actually curious. With a break even, if I go roll for one more week right before earnings, I could roll this, keep the same strike for another $4, roll this down for $6, roll this down. If I did this here, I'd get $9 credit. Let me do the math on this. I'm probably going to take a little bit less profit, but I'd still grab something here. So 224.28 minus 950, get it called away at 240 times 300. I mean, for me, the risk of making, I guess to make an extra $500 is not worth waiting a week with this type of volatility. If the market can hang in there for these gains to be sustained, then I want to let this go for just under 7K, get the buying power back. I've got some ratio spreads that are looking better. So this position, for example, by next Friday, if we stay above 255, that should be good for income. Also, I can flip this assignment for about $2,300 or so. I can flip the assignment, potentially take on another assignment, do it again. This one is looking good for full profit. This is out to May, but I've got a 195 strike. This one's out to May for a 245 strike. So I'm just trying to make sure I've got dry powder again. I've seen another jump up about 165K in buying power, which is good. I'm going to continue to de-risk, de-leverage, and get that buying power back up, hopefully like 1.4, 1.5 million, and decide where I want to allocate. So a couple of trades. I've got a webinar coming up at 4 p.m. for my Waterfall income service. We have a couple of trades running right now. Double up looking good. Hedge I'm going to hold off on for now. That was up $1,000 today. and it's again, it's out to December, so I'm not that worried about it. Naked put starting to look a lot better, especially with this price action. It's a 460 put. Those are okay. This one, May 30th, that's okay. This one is a 1111. That's fine. This trade. So waterfall income right now is up around 30%. If I take the profit, that's not a bad spot to take the profit, grabbing that 30% winner. So let me see what this is trading for right now. At a 305 debit, and it's trading for 395, 396. Let me see if I can grab. Maybe I can grab 405 out of this. See if I can get $4 for this. We're trading on the SPY at 534. That's plenty of price action. Let me see if I can get a 395. 395 got filled. Okay, I'm going to take profit on that. So waterfall income, I'm going to get this one updated. 395. $394. Okay, let me get this updated. I'm closing this trade down. QQQ is also looking pretty good. Let me take a look at that one. So Q's. This one is not as man. That's got to be just a little bit of less liquid in the QQQ versus SPY. I'm showing up around 26%. So 370. I paid. I mean, that's not bad. See if I can get 375 for this. If it doesn't fill, I'm not going to sit here and hold my. Oh, that was easy. So that was a debit of 295, close out for 375. All right, let me get these updated for the service. So I'm sending out messages, waterfall, income, trade, management, SPY. Look at the numbers here. So the 500 by 505, that was trade number 78. SPY, trade number 78. SPY, entry for 305 debit, close 3.95 credit. So that is a bit of a winner that's larger than what the usual take profit for me. So let's see, that is a net 90 cents. So 90 out of 305 is a 29.5% winner. Okay, I'm taking the profit. Closed. Trade number 79, QQQ, entry 2.95 debit, closed 3.75 credit. So that is 80 cents, 27.1. Okay, so those are getting sorted out. 3.75 and 3.95. Profit is 80 cents. Risk was 2.05. That is 90 cents. Risk was $1.95. So return on risk is 39% and 46%. Let's go here, edit at a 39.02. Percent return on risk and a 46.15% return on risk. All right, there we go. Good stuff. Okay, so I can close those down. Those are looking pretty good. Totally fine. Hit the profit target, no complaints. Bid is right there for 395, and the Qs. See what the Qs were trading for again. 363. See if I get out here for 375. Maybe 380. See if there's like a wide spread here that can get filled at a better price. 392, even better. Wow, even better. 392 on that one. So that is just under $1. What is that? $1.70, 97 cents. Good. So Q's taking the winner. SPY taking the winner. Let me go in. I'm going to take these profits and run. So this one is up. Let me see if I can close this one down for 395. I mean, the fills are being really generous here. The mid showing like 310, 315, 320. I'm getting filled at 396. So I'm taking the winner there. And then the SPY, this one closed out for 395. Okay, that one's done. This account, SPY. All calls. Hedge. This guy right here. Waterfall. There it is. Try to close this over $4 if possible. 405 maybe. Survey says $4 perhaps. $4 got filled. Okay, so SPY's closed here. Q's closed there. Good. Q's. See if I can close this one for $4. Filling at $4. That's a generous fill. I will take it. I get into that trade for $295 Monday. And what is today? Wednesday? Closing out for like a 46% return. That's pretty good. SPY right here. See if I can get the SPY to close out above $4. Oh boy, now showing 430. Nice. 410 maybe. As long as I get over $4, I'll be pretty happy. 410 not filling. 405. $401. 401 got filled. Okay, good. All right, I'm gonna take like two or 3 minutes to close these all down for my accounts. It's like $400 profit. I'm gonna take it. So this trade for that strategy, close, getting filled here, hopefully. See how generous it's going to be. Not quite over the 415 mark. Let's try the 410 for the Qs. Try $4 for the Qs. $4 for the Qs. There we go. And here, closing this down. 401. All right. Be generous at $4, please. Thank you. $4 got it. There we go. So there, SPY should be able to close out at 401. Filled at 401. Qs. Come on, $4. Fill to $4. Very good. $4 filled. SPY this guy for $4. Try 401. Taking it at 401. All right, a couple more counts. Bear with me. Waterfall. Trying to sneak in a couple extra pennies if I can. Fill to 405 in the Qs. Very nice. SPY. This guy for the calls. Okay, 410 not filling, 405. Come on. 402. Fill to 402. Fine, fine, fine. All right, almost there. Closing for a win. Qs right here. $405. 404. 404. I'll take it. Okay, that one is straight cash. Just have some shares. These two looking good. $404. Good fill there. SPY. Fill at 403. And then last account. Last account. Here we go. Close this down for hopefully 4 and change. 405. Very nice. And filled at 405. Okay. So net result, I had one trade that was a 405, got in for 295. So 405 minus 295 out of 295, that's a 37% return. And a 401 over a 305. 31% return. So not bad. Good return on risk. I'll take it. and those trades were taken on Monday, closing out today. On top of that, watching some P&L, that's a huge swing today. No complaints, obviously. I mean, I was in the markets last night watching to see like what happened at 10 p.m. 10 p.m., 11 p.m., 12 p.m. or 12 a.m. Like, what's midnight? Is this tariff stuff going to kick in? Is the market going to react to anything? I mean, not yet. So we're still reciprocating against China, but looks like the pause for the world is probably a good thing. The market clearly liked it. What a ridiculous day. Um, I don't want to fight this. I really don't. I mean, I'm not saying this is going to be like the rip to all-time highs. Um, but I think if there's some momentum here, like this is what the market was like desperately wanting, desperately needing, and you can see how anxious the market was to rip higher. But I don't think we're out of the woods yet. I mean, this could certainly run into some major resistance right in here. So I'm not going to go ahead and short the market, although that might not be a bad spot to try. I'm curious what this VIX is doing. The VIX has to be retreating in a big way today. Oh yeah, look at that. So VIX up here to 60. I mean, now we're down to 35. Just a monster decline. The VIX is down over 40% for the last 3 days of trading. I mean, obviously it was like very sticky, very elevated, then it just getting smashed today with this rip. Crazy amounts of volatility today. I mean, intraday, I'm glad we took some winners on daily profit play because this would have absolutely busted up those trades. And I'll take the winners and be happy. We got that early in the day. Now this is helping the tilt of the portfolio that's been nibbling and biting and selling puts, and we'll see if things settle. And then time works in my favor. Some of the premium that I've been selling, allowing this to hopefully be another level of protection. So I mean, I obviously want to see the P&L year to date continue to grow. I'll be watching my expirations closely if I've got some incomes, and I'm just going to take a look. I'll go A to Z really quickly. I'm looking at the chat here. I'll take some questions. Here we go here. Does it come across anyone in the Trump administration manipulating the market directly? How much money can his family and close friend? I mean, who knows, man? But nobody's going to say anything else because the financial markets have always been this kind of measure of like people's wealth, people's retirements, people's investments. The biggest and most brilliant minds, the haves and have-nots, those in the know that those aren't. It's like, sure, there's probably tons of manipulation going on right now, right? But this is also I'll show you the position right here. That was weird. That must have been lagging like crazy. Let me go 1, 2, 3, 4. And here's my analysis on copper. So copper, this is my trade, and this is where copper is currently sitting. There's real price at 4.42. So, I mean, if I look at the option chain, this is going to be the most important thing for me is if I look at the option chain for the 24th, 4.2 is now out of a expected move. And we're trading with a high, volatility in the markets. I mean, copper was essentially, all-time highs to smash back down to pretty scary levels in no time whatsoever. I think it dropped like 50% if I go to copper futures. Let me go HG. Copper from high to low, 50%, 25%. That's still for a commodity that was ripping to all-time highs. Put on the brakes, scare the pants off everything. Again, what is this market going after? Well, this is a high and this is a low. Even if the market's pulling back into this candle, this pocket, this inefficiency. I mean, high, low, lower high. Do we pull back 30%, 38%, maybe 50%? If that's the case, there you go. you know? All right. Gold. I had a big, an interesting back and forth with a trader this morning named Igor, and he was, as perma bull as they get on gold. And it's like, look, man, I'm not arguing. We're arguing the same thing here. I like gold, but I don't like it at this level. This little 2970 level does not attract me to buy more gold. I think if you are lucky, this market just goes sideways. I think if you're really lucky, the market goes exponential. But I think to the bull, the gold bulls out there, if gold goes exponential, we're probably seeing a lot more uncertainty and pain and fear in the markets, which is okay if you're like just buy gold, sell the markets. Yeah, maybe whatever. But from a technical standpoint, gold is still due for a correction. Okay. I will list the stocks off the top of my head this year on why I was bearish the market. SPY, QQQ, Costco, Walmart, Meta, Netflix, Palantir, Carvana. Carvana. I think there are more, but those off the top of my head were things I was actively short. I even shorted GC for crying out loud and made money on it. So these, even in Berkshire Hathaway, I didn't short Berkshire, but BRK.B, Berkshire Hathaway, these all had a large 300 plus bar count on the 200 moving average, and they all found it. So gold has not found it yet, but I think gold is still lining up. Is this an immediate pivot in gold where now that the market can rip, is there upside in the markets and down with like less of a fear driven move in gold? Maybe. I still like gold longer term. I really do, but I need a dip. And a little tiny blip right here is not enough. Okay. Pamela, nice. Good to see that on SPY and Qs. Must feel good to see some green. I mean, it certainly feels better than yesterday when I overtraded and got, shellacked at the end of the day. That really pissed me off. But, obviously today it's fine. I mean, I'm not like overly excited because I don't think that any of this movement is sustainable. So I'm ready for the market to do some type of tuning fork is what I call it, when the market is, straight down and then straight up. At some point, the market's either going to decide that it can't do that type of volatility and it settles back in. And then maybe that is the accumulation that is either justifying a higher high, or this is resistance that justifies a revisit to the lows. I don't know yet. Like I'm not thinking all-time highs. In fact, if we do get to all-time highs, this market is even like crazier and dumber than I could imagine. I won't be upset, believe me. Like I'm not sitting here and I'm not going to hate on the market making all-time highs, but this is very abnormal stuff. I mean, this is being treated price action wise as if the market were to be pivoting on COVID, for crying out loud. Oh, the Fed's coming to the rescue with $6 trillion. Boom, market's V-bottoming. It's like I don't think that's the trade. I think this is a squeeze that was pent up. It's been pent up now for 2 weeks. I mean, we've clearly seen this week like massive move on Monday, massive move on Tuesday, another massive move on Wednesday. There's more in the tank. I mean, we still have CPI news tomorrow. If CPI comes in trending lower, then the market may love that a little bit more, and this squeeze continues. I'm really curious. I mean, right here, I know that my account was sitting at 205 year to date. And I'm curious if we get into the same arena, do I sit here with a, 210, 215 year to date? Like, hopefully so. But I've taken some hits. I mean, I've taken some losses. XSP cost me money last week. We're making this big scream. XSP's up to 539. If we have a 2-day push and it somehow gets up to 555 or 560, freaking sign me up, dude. Because that goes from about $1,000 loss into like a $200 to $300 winner. I'll take it, and I think it's worth hanging on to. So anyway, good stuff. So where are we at? I see my screen. It looks like the stream may have froze, but I'm on SPX just talking through this giant candle that we're looking at right in the face. RSP, big rip around the day as well. 90 days to equal weight all-time highs. Yeah, that's probably not as important anymore. Futures they all look the same. MES, I'm curious, just overnight, I had a trade on last night that I canceled. I took about a $200 loss on it. That would have been a fun trade. I was going to look at a synthetic long on MES. It'd be up about 450 points. It's not a bad trade. Times. Yeah, that would have been a nice little way to add to some gains today, beat up another 27 grand. But alas, I didn't, because that was a stupid trade in case the market went lower. And I was playing for the uncertainty. But Waterfall is a perfect strategy to capitalize on stuff like this. You don't have to overthink it. Double up's looking better for some profit as well. I've got some trades in on, I think I did double up on SPY. SPX, that trade was a winner. What was that? 965 credit, closed it for a 45 debit. So equals 0.20. So was my risk there, 0.20. Nope, it was a winner. I did it kind of backwards. Let me see. I grabbed 20 cents. So I guess it's 50. Okay, 55. I got it. I just have to do the math on this. 55 minus 35 divided by 35. There it is. Okay, we got a 554 by 560. That's out to the end of the month. So if we continue to run on SPY, we could turn that into profit. It's not there yet, but still watching. So newsbreakers, I'm watching. If you're in my newsbreaker service, JPM, it's showing some profit right now. JPM is showing some profit. It's up about $600, but I'm not able to get the close that I want. So let me go into an individual account and just label it. It's a little bit easier to organize it this way. So I'll go JPM 1, 2, 3, 4. This is newsbreakers. So it's showing that I'm down. We're trading at 234. I mean, I know the risk is small here. I'm just curious if the market is like, I basically sold premium at 225 for a $10 move one way or the other. Now, this was before all the, like, this is non-earnings movement right now, by the way, so I don't know. If somehow this comes back to equilibrium, I'm hoping that market makers do their job and they defend this area somewhat. So we're having like larger than one standard deviation moves. This is probably, I don't know what you make of this. Like, I don't know what to call this other than it's way more than expected. I think we came into the markets today, the expected plus minus was like maybe 200 points, and we've had what? From the low of the day to the high, you've had a 470 point move. So probably a 2 to 2.5 standard deviation move today. And the day is not done. There's still an hour and 15 left. I wouldn't be terribly shocked if the market starts here, goes here, pulls back to maybe 30%, and then finds a way to keep going higher if the market's all excited about this. Or at the same time, because this is major resistance, if this is the short squeeze that is freaking done in an hour, like we covered so much room in 15 minutes. If this comes back and settles into these, like this halfway point, or even closes this pop today, I mean, this is enough volatility to make your head spin, you know? So just pick your battles and buckle up. Like, more volatility is probably ahead. There's nothing certain about this market right now, but I will say it certainly feels a lot better to watch this happen than going the other way. This move right here, this move is the opposite of what this was and the opposite of what this was. So believe me, we felt the downside move once, twice, 3 times with a shakeout, another shakeout yesterday. So I mean, you've had this feeling 1, 2, 3, 4. You've had about 5 nasty bear days to 1 ridiculous squeeze to the upside. But that's okay. What's your take on oil considering Trump's? I mean, oil doesn't look good at all. Oil breaking below $60 is pretty critical. Look, this could be a nice little trap on oil, but this is probably not a good look for inflation. I mean, if oil comes back up here, maybe the best thing the U.S. can do is turn on all the rigs, drill like crazy, and try to stabilize price in here. I think oil, I mean, nobody wants to see oil back to 70, 75, 80, $90, but perhaps nobody wants to see it below $60 either. So, what we might end up doing on oil is if we don't clear 65, we might just have a new range, right? Maybe this like 65 to 55 zone is a new range on oil. And it just becomes like kind of controlled with supply and demand and manipulation and ranges. Biggest rally in 5 years, says Lee on the Dow. Yep. And yeah, that's what I said. It's like you're just going to see all these headlines. It's like, oh, it's the biggest move, blah, blah, blah. I understand. When the market has big moves this way, it's likely going to have big moves this way. Like this is a reflexive market, and there are option flows and leverage to the teeth in these financial markets. And that's why these things are doing silly things. Like, I mean, have a look at Mag 7. Okay, here's Apple with a big move to the upside, showing 8% on Apple. Here's Mag 7 up 11%. No big deal, right? I mean, that would have been a nice one to be long. Be up $400 a share right now, or $400 for a contract. Amazon is up 9%. Broadcom up 15%. Google back up above the 150 plus handle. Encouraging. Meta right back to the 200 moving average. I don't love it. Meta was down 35%. Still using that 200 moving average as maybe some resistance. Microsoft certainly looking a lot better. Let me check on my trades on Microsoft. I think I have some ratio spreads this week on Microsoft. It might be expiration next week, but let me confirm. Maybe it's May. April. Yeah, so my 370, 370, 370. Let me check where this is trading at right now for the 17th. Earnings is 24th, so this is pre-earnings. Right now, the 370 handle is showing about a 28 delta. So there's still, it's not like super high probability yet. It's about a 70% winner. But if this momentum continues, that's a good thing. This delta just gets smaller and smaller. This becomes a higher probability trade, and potentially have a profit trap running with a, what could be like a $6 winner versus like $1 or something. These are worth $2.28. If I get a profit trap or any bonus trap on top of that, closing this thing out for like $250 or $300 a contract would be pretty good. But line in the sand, we're back above it, which is encouraging. Okay, what else? Netflix. 930. I've got a broken wing next Friday, way up here to all-time highs with a $10 profit trap. Nvidia back up to 111, all the way down to 87. I mean, this is the beautiful thing about some of the premium that I sold. Here is Nvidia. Has some shares, have some collars, naked puts, sold some puts. It's just now starting to look better. Right? I mean, I sold for the month of May and June for $2.73. I'm up about 42% in that trade right now. I want more. I want to see if I can get this to like 85, 90% of that credit. But sold some premium, 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 sold some premium again and again and again. So, if this adds up nicely, let me do a quick add through. So I have Nvidia with some, I'd say, high probability option trades. $1.41 plus 141 plus 140. So this one is 141. Let me do that math again. So 141 plus 1.32 plus 253 plus 345. Collar, put here for 346. Okay, and then put combo here for 526. Another one for $5.30. $2 or $3.49. 349. 348, 253, 3.48, 2.53. Another one's for 273. And some more puts that I need to organize, but these are bull put spreads or naked puts. This is a ratio spread, 51 by 50. Ratio spread, let me put one in here as a ratio spread. That'll give me my final number here. If I go NVIDIA, where are you? NVIDIA. This guy, this is a ratio spread. Okay, so that ratio spread collected $2.01 on top of this, 2.01. Okay, so I've got 36.97 in premium on NVIDIA times at least 3 accounts, probably more. I'll be conservative. I'll say 3 accounts times 100 for one contract. So there's $11,000 in premium over the next like 40 to 60 days if price stays above 70 or $75. Like that is the battling back that I've been talking about. Like I'm just taking bites, I'm taking high probabilities. I'm sticking to a lot of the rules I trade all the time. This was an insane volatility environment. It still is. I don't really know, what to make of this outside of your head's going to spin. And I wouldn't fight any of this. Calling a top, calling a bottom might be the worst decision you could possibly make right now, because clearly the intraday moves are big enough where you're getting swings that nobody's planning for, right? Your plus minus on the chart, your implied volatility, it doesn't matter. You're getting potential swings through the day that could be way, way, way larger. So if you're doing anything in the mornings, if you got profit, take it. Okay. Christian, I see that there. If I get a retracement at NQ, I'm buying hard. I mean, that's understandable. I would look at this. Let me just zoom in on this chart. I mean, here's an ES feed. So if we take this low, just as an example, I mean, and there's no like perfect way to do this fib, but if you go from this low to high, somewhere in that swing, right, that'd be a good swing opportunity. Either that swing, if you have some confirmation to buy like a 30%, 30% pullback, anywhere between this like 30% and 50% zone, if I get some bullishness, I mean, that could be a really good opportunity to get long again. At the same time, if this market drifts higher, if this is, just rip higher and ripping, I would draw a trend line. I think this is so inefficient that we're probably going to come back and find some equilibrium. So for buyers or sellers, there's probably opportunities, but this to me, this is not the coast is clear. I will say that if we have a pleasant surprise move to the upside where this thing is screaming towards, I would say like 57, 5,800, 5,900, if we're screaming towards these levels at 57, 5,800, that's honestly like, it's fine. I would embrace the rip to the upside and be happy that, I'm probably going to be back up to like 240, 250K for the year. But I'm also like all the profits and all the nibbles and all the premiums that I've been selling is hopefully going to add another, I would hope another like 30, 40, 50 grand to my profits this year, because it has not been easy to watch my P&L go with like a cash secured put, for example. The premium has just grown so excessively in the last 2 weeks. So even though I have levels that are super safe and I have deltas that were extremely low, that risk is there. So as an example, when I sell a 435 put on the SPY, right? So I sell a 435 put, and for my broker, it's like, okay, you sell a 435 put. The broker says you need about $1,500 in buying power. Well, obviously that's no big deal. That's portfolio margin. I can handle that. So a 435 put. So I sell one put at 435. Now when I get the trade in, I've got about a 90% chance of profit. What do we come down to? This low, we came down to about 480 on the SPY, right? But the IV went so big that this 435 put, remember, if I'm on the hook for this, the market prices this in as if I could go to zero. And so if IV gets that ridiculous and the VIX is up to 65, it's like that's a 65% move. That's what a 30-day, that's what it's expecting. Like it's so insane what the VIX actually means, right? So that is a crazy town. Now, that puts a lot of pressure on my put if I'm not having price go up or not having price stay well above 435. So the more volatile the market stayed, I mean, this trade is potentially on the hook for $43,000 of risk. Now, I know that I have a portfolio margin account, so it's really cut that in a third, but I'm still on the hook for like 10 or 12 grand. And I have this on 3 accounts. That's like $30 to $40,000 in P&L that's fluctuating. That's not actually like at risk necessarily, but it's the floating P&L that I've just had these monster swings. So, I mean, I've watched big days become, big greens and big reds, and it's just wacky do. It's wacky. But the nice thing is at least today kind of puts a little pause in all that, and the market is, you know, covering a squeeze, which is it's great. I'm not going to complain. I just wonder what's next. I mean, this is, as I said, I'm hoping this isn't just immediately up and then it comes crashing or squashing back down. I don't want to see that, obviously. But if this is, up and up and up and up and up, okay, fine. I'm curious where my P&L's at. If we go up another, 200 to 300 points, I'm hoping that my year-to-date P&L is getting back to all-time highs again. And the market can still be down 7, 8, 9% for the year, and I'm up 9, 10, 11% for the year. I'd be happy with that, obviously. But what a ride, huh? Okay. Rules before taking a trade. I mean, it's all math. When I take a trade, it's probabilities, risk defined. It's like I'm going to risk less than 1% on this trade. If I like the stock, I'm going to own it, maybe allocate a 1 or 3% stake in my portfolio, and then flip it for repair. When I repair stocks, I usually like to make $500,000 on a repair. If I can make more, I'll make more. Like Tesla's an example. I'll make about 7K as long as we stay above 247.50. That started off initially as making about $600. I rolled it to a third week. So now what was going to be about a $2,100 winner has been rolled out in a few accounts, and now it's about a 7K winner because premium was so high. But it still has to stay above 247.50 by Friday. Okay. All right. So anyway, we will see. Top down currency strength also had a big rip today. 300 on the Aussie. Swiss and yen getting smoked right now. This is helping all of my Swiss pairs. I did add some positions back in for this exact reason. So my Aussie Swiss is actually close to break even now. My CAD Swiss, which I've been moving lower, is close to break even now. My Euro Swiss is a little upside down. I didn't add as heavy on this one. My Pound Swiss, I'm still in. This one's on my Tasty FX account. I just added a couple trades in at the 109 and 108 handle that were filled. So this one's probably, I think pound Swiss can go back into 112 to 113. I did have a pretty large target all the way up towards 119, 120. I could care less about that target right now. I've been averaging the pound Swiss for a long time. This was my profit target. I'm sorry, that wasn't very straight. 119, 120 was my profit target. We just had this long-term range, broke out, retested, obviously like flash crash type material, came back to revisit the same lows. If you're long pound Swiss, the margin I don't love. It's a little bit more expensive, like 3 times more expensive than your average Swiss pair. So be light on the margin, but the volatility is good enough where if this thing pops back up into 1.1, 1.2, you turn that into profit. I would take that profit, take that margin, and go apply it elsewhere. So that's the pound Swiss. New Zealand Swiss. This one is close to break even. And I think I'm pretty safe to say that we're coming back to like 49.90 or 5,000 again. And if that's the case, and we could put in some real bottoms here. If this market comes all the way back up and forms a swing, I will probably exit this entire position for a winner. And then we pull back. I'll add more on a swing, and I'm looking for at least a 3-wave move, if not a 5-wave move. Like I'm telling you, I am not giving up on the bigger picture of these Swiss pairs, and I'm going to try to make as much money as I can. So dollar Swiss, right back down to the lows. And now we're talking about a move probably back up to like 88, maybe all the way back up to range highs in the 91 to 9200 zone. So this will really depend on how risk on the market is. I mean, the Japanese yen is behaving to its own drum right now, or beating to its own drum. The dollar's doing its own thing, but Swiss wise has kind of been the safe haven flow. If we see risk appetite, this would probably be one of the biggest reasons I'd cheer on the stock market to go higher, because if it can, Swiss gets weaker and I start making lots and lots of pips and lots of trades that are some big profits. So I wouldn't mind closing out a nice big chunk in the portfolio for Forex. I've got, like, I don't know, $2 or $3 million in Forex. So if I can make these Swiss pairs pay me, which by the way have paid me like 4 or 5% over the last couple of years just on swap, and I start adding and piling in some stacked up levels that have gotten a little bit bigger, this drawdown came right back to where it started. So I mean, I've been able to kind of average in more, but still trying to keep plenty of margin available. But I'm just not playing I'm not playing games here. It's like I want to just close out for some of my profit targets. I'm adjusting. I'm flexible. I'm not trying to be greedy at this point. If this comes back to the halfway point, I'm break even down at like 86. I'll take profit there. Aussie Swiss, you saw where my break even was an Aussie Swiss. There's a nice big fat pocket all the way back to this like 5,500. My break even's around 5280. So I mean, a few hundred pips on a half a standard lot or standard lot is I think that's good enough. I'm okay with that. Okay. Christian, my Discord, sure. I'm going to give you a 30-minute link for Discord just because I hate posting Discord on YouTube because then I get a bunch of freaking scammers that pop in there and, direct message all these people that join, and it's just crap. So, I really kind of hate Discord for that, but it's a good place for me to put all my content. And if you want to find me, I'm real on my Discord channel in public where I talk to everybody in the live chat. So no direct messages, no friend requests. I don't do stuff like that. Just talk to me in the channel. That's the best place to find me. All right, so let me find a 30-minute link. 30 minutes for Discord. Okay, so here is Chris Pulver Trading. Here's my Discord channel. And also on Telegram. Telegram right here. Telegram, copied. Chris Pulver Telegram. And then my YouTube channel, which has been growing steadily the last couple of years. If you're not a subscriber, I mean, we're live right now, but any additional subscribers would be great. I'd love to get to 10,000 this year. Curious what 10,000 looks like at the end of the year. Do we get from 10 to 12, 10 to 15? Like, how quickly does this grow? I'm literally live on YouTube 5 times a week, if not more, sometimes 10 times a week, depending on a couple sessions that I run. I'm trying to make this as consistent as possible. It's not a money generator. Like, YouTube is literally trust content for me. It's a creative outlet. It's a nice way for me to be out there and really show stuff. It's like, look, I know people use Facebook for ads and they use YouTube for ads and buy this, and this is trust content. Like, I'm just live talking through the markets. I run services. You want to trade with me live, you pay for that stuff. But as far as like these final hours and managing positions and talking about my services, like, yeah, I'll talk through them. But as far as like live trading with me, it's like, yeah, you're gonna pay a service for that. But I try to make it as cost effective as possible. I think what I'm asking for is, if you're going to pay for anything with me, it's my time. I mean, I'm at the market, opening bell, closing bell, almost every single day. A good example is this week. It's like, I want to be at Augusta all week watching the Masters. It's been a nice little tradition for me. I've got family that lives 20 minutes from the golf course. It's one of my favorite weeks of the year, and I'm here still in Salt Lake City, and I'm flying to Atlanta tonight. I'm going to work in an office tomorrow, and probably leave after closing bell, and then work in the morning on Friday, and then maybe like lighten things up on Friday afternoon, and probably not even see the golf course until Saturday. So again, white people problems and first world problems. I understand that. But the market is nuts, and this is my job. So I understand the privilege of doing something that I love and enjoy, but I don't really take a break from the markets. It's like, I don't think this is the time to take my eye off the ball. I think this is stuff I have to pay attention to. Making sure I'm combing through the portfolio A to Z every single day. That's important. I've already had 67 trades come and go today. Little prunes, little checks, little adjustments, little closes, add-on trades. I mean, whatever I have to do to kind of keep, like, it is like a bonsai tree. It's just like, keep pruning, right? For profits, prune for risk, tighten things up, roll things out, like whatever you want to do. But it's active management, and that's my style. So anyway, Discord link is not attached. Oh, sorry, my bad. Yeah, here. Sorry, I'll put that right here. Chris Pulver Discord. Chris Pulver Trading Discord. There you go. Now the link's there. So my Telegram and Discord and my YouTube channel, youtube.com/Chris Pulver. youtube.com/Chris Pulver. Subscribe. There you go. Okie dokie. Well, that was a different switcheroo for the old final hour, but I wanted to kind of meet it head on because this was a pretty wild day. So, I mean, I think this is a pretty good way to sum it up. Basically, the U.S. announced a 90-day delay in tariffs for the entire world except for China. Market clearly loved it. Market did another wild swing. I mean, this is as big as what we saw on Monday when the market was down and straight up and then back down. So this was the market getting all excited about the same thing, by the way. What was the market excited for on Monday? A 90-day pause. Turns out it was fake news. So this low to high that came all the way back, you correctly link. Oh my gosh, dude. What? Discord. Let me see. Hang on a second. Server settings. Let me go to invite members. Chris Pulver Trading. Invite people. I'm using this link for 30 minutes. Generate a new link in Discord. Copy. Let's try this for a third time. Chris Pulver Trading Discord. Final attempt. Did that work? Son of a biscuit. I don't think that worked either. That's probably Telegram. Hang on a second. I've got it right here on my stupid screen. There. For crying out loud. Click on the one that says Discord. Sorry about that. There's my Discord. The old copy and paste button was flaking out on me. All right, Charles, what do you got there, Charles? What a lovely week of volatility. Trading every trade at one entry, 33 cents, $1 to $2 risk reward. Taking every step, up 4%, trading smaller, glorious. Good, Charles. Happy to hear that, man. Yep. And yeah, that's fantastic. I mean, literally today, 220K. I mean, I'm probably up kind of tick for tick with the market. So 220 on the day out of, yeah, I'm up 7.6% for the day. And again, I don't really take any goods or bads with that. It's like the way that I make most of my money is I'm in, there's options, and I take some profit, I roll, I protect. I mean, most of the time it's like if I get a trade in for 45 to 60 days, I'm probably closing that at a profit percentage. I'm probably closing that within an X amount of days to expiration, or I'm rolling it or doing something different with it. So, I mean, a lot of what I see here for like P&L day to day, it fluctuates so much, I don't even pay attention to it. P&L year to date, obviously I care about that. So I was, up $205,000 this year. I'm flat right now. And that's been a really frustrating swing, but a lot of that is because of the implied volatility that's changed so much the last couple of weeks. So that type of option exposure that I have has made it look like on paper I've got way more risk than what I actually do. Because all the market needed was this. Like the market needed not obviously an 8% swing, but the market just needed to kind of pause and settle the heck down, which volatility is clearly doing. So this all by itself, this move all by itself for the VIX, this is enough to probably help me get profit on almost all the trades that I took in the last 2-3 weeks. Every premium that I sold, every ratio spread, all those things that were like 15 deltas, 10 deltas, way out of the money, way past the expected move. Collecting some premium probably helped. Yep. So anyway, not bad. All right, let's keep going top down. I'll go a little bit longer. I got a webinar coming up in about 45 minutes. So I'm going to take a little breather. I've been talking all day, and my voice for the last like 2 months has been like on the verge of losing it all the time. So whatever, I'll keep talking. But let's talk top down. So 8% for the actual, like just read the tape. 8% in the S&P. SPY's up 8.03, fluctuating a lot, but still, what a heck of a day with this final 50 minutes to come in. Nasdaq up over 10%, Q's up 9.98, Dow Another face ripper at 7%, which is pretty impressive. Russell not quite getting all the clapping back. Russell's down 20+%, and it's up 7.5. It's certainly making an impressive comeback. But I mean, I here are the stabs I took on the Russell. I sold premium on the Russell to the end of the year, and I said, look, if the Russell comes down to 105 or 100, I will own shares of the IWM, right? And this is probably a $1,000 winner. So $1,000 winner on 3 accounts, and it's another 3K. That if price goes back up here, well, that time decay and price being so far away and becoming probabilistic that I'm gonna make money on the trade, what should be 3,000 in max profit could probably be closed out for maybe 2,200, 2,500. Like a majority of that profit can close out way sooner than waiting all the way to December. So, like stuff like that is good. Like when price goes your way, with the tilt to your portfolio, which I do have like a slight positive beta weight, versus being entirely delta neutral, which I think can be challenging because especially when outlier moves like this happen, being delta neutral, those moves are so big, and when you get past standard deviations, delta neutral is going to bust you up most of the time. So I mean, undefined risk trades, a lot of traders that like strangles, which are fine, but strangles, I see too many stories like this. This move makes everyone lose money in strangles. Okay, this move makes everyone lose money in strangles. This type of move makes everyone lose money in strangles. So I just keep it risk defined. I'd rather sacrifice the little, but I get it. There's flexibility. You can roll. You can do all sorts of stuff. There's more maneuverability when you're doing naked options. But man, it comes with a lot of risk and a lot of you got to understand how to manage those trades because there's probably a part 2, part 3, part 4 to those trades versus just set it and forget it. So I'd rather not have to rely on that because I'm managing so many accounts. It's easy for me to kind of set the defined risk, know that price goes up or down, and I just trade based on the mechanics of the math. Keep it simple. Okay. All right. Previous guest on A1 said copper is universal indicator. Why? Well, it's called Dr. Copper. So basically, it means this: copper is it's called Dr. Copper. The joke is that copper has a PhD in global finance and economics. And the reason why is because when times are good, copper is one of the major components and supplies in infrastructure. Right now it's like if you're building out the AI grid, you're building out telecommunications, you're building anything for computer and semiconductors, cars, homes, any type of infrastructure is going to require copper in some way, shape, or form. Okay. So copper is a sign of global demand. And when everything was cooking this year, when everything was up, and it's like, oh, Europe's doing well, and they're spending. What's Europe spending on? Defense and AI. What's China doing? They're talking AI. What's the U.S. doing? Talking AI. So copper's been this, this sign of like good things, like the global economy's kind of humming along. Well, all that switched and pivoted hard with this immediate stop to global trade. That's what the market thought, right? But now look at it. It's kind of responding back. I don't envy it's like I don't want to get long copper right now. I mean, I kind of would like to, but like this ongoing China US stuff can keep battering copper a little bit. I just hope, I mean, honestly, for the trade that it took, I hope I stay above $4.18 over the next 15 days. If I can do that, I'm happy because I'll make about $160 per contract if I win above the 420 handle, and I'll make about $500 if I keep it in between like 420 and 418. I'd be happy at $160 a contract for my accounts. So, but anyway, it's a sign of global growth. And so when copper is growing, that means that things are looking pretty good. Everyone's building, everyone's pretty excited. There's some optimism, there's some risk appetite. So that's what copper represents. So if you want to think about it, the shorthand way is just think about it as Dr. Copper, PhD in economics and macro finance. And all it means is, when things are good, copper's up. When things are bad, copper's down. Well, in the last 2 or 3 months, you've seen exactly that. So there's your lesson. Yep, Eric says I got killed on my strangles. It's not a surprise, man. That is unfortunate. I know a lot of good traders that in the month of March got killed on strangles. Like, hey, so-and-so's up, 9% for the year. Awesome. We're crushing it. What about February? This pullback, no big deal. We're up 9% and then down 15%, just like that. That's a 20+% swing in your account because of undefined risk. Granted, you can trade through it. You can strangle your way out of it again. Strangles do pay high premiums. You can make consistent money. But the biggest thing that always turned me off about strangles is how bad the bad gets, right? Like you do the same thing right all the time and you make good money, good money, good money, and then undefined, boom. You just take away weeks and weeks and weeks or months of gains, and there's not really a lot you can do about it. Because what you can do is you can get in trouble. So let's say that I'll just use this example. We'll just say that I'm strangling something here, right? So I'm selling a call, I'm selling a put, and then price drops. So you can call it the S&P for crying. You can call it, ES futures. You can call it Nasdaq futures, probably ES futures, maybe some SPX, whatever. But you're strangling, right? Strangling SPX is impossible because it's like $500,000 required. But strangling SPY works. Strangling QQQ works. But my point is when the market drops, it's way below the expected move. What you can do is this. Well, you're going to roll this call out, or I'm sorry, roll this put out in time and roll this down if you can. You're going to roll this call down and down and down. You might even go inverted and try to mitigate some of the risk. But what happens is when something goes into trouble like this, you find yourself like rolling out in time, rolling out in strikes, and getting all things kind of crisscrossed, and it just messes up everything. Now you can mitigate a lot of the risk. You can take what should be, a bigger risk that's undefined to then make it something manageable. So instead of losing $2, 3, 4, $5,000 in an undefined risk trade, you can maybe work through it for a break even. And that's a beautiful thing about trading options and understanding how to manage those trades. But for me, that is not fun because for me to do that on every account and have to not only take the trade but manage every aspect of the trade, multiple rolls, multiple break evens, multiple work throughs, it's going to be exhausting. It's not worth it for me to do that. I think I can make a lot less money a lot more money more consistently with a lot tighter risk management by just going define risk. You know, like an example being if I did an iron condor on like let's say I am looking at here's an asset price trading right here. Well, if I sell a call and I sell a put, that's undefined risk, and I can make more credit that way. Okay, but if the market goes like it did today, straight up, this trade is in a ton of trouble. Okay, what I would rather do is have this trade if I have a -1 call and a +1 call, the market can go through everything, and I'm only going to risk the width of the spread. Right? And meanwhile, I will win on this trade to offset it a little bit. So there's my sell put, there's my buy put. So I win here, I lose here. It's defined risk. I survive. I trade another day. There's no plan B. There's no backup. I know I can't roll it. I know I can't mitigate the risk. It's totally fine. I'll just take the loss and move on. But that looks like this on a P&L curve, right? Those type of trades, if I have a bad day, it looks like that. Looks like that. Looks like that. Versus if you do strangles, it's going to look more like this, or worse yet, it's going to look something like this. That's what's no fun, especially when traders get cocky and traders start trading bigger contract sizes on potentially positions that they can't afford to have. I mean, look, if the market goes down, I will say this: if I can afford to own shares of the SPY, I'll own shares of the SPY and I'll repair it with covered calls and I'll add collar trades. That's fine. That's a different way to manage strangles. But if you get busted to the upside on a strangle, there's nothing you can do there. You know, So and bonds have made like big outlier moves. S&P obviously has made big outlier moves. Nasdaq as well. Futures have made outlier moves. Like it's crazy right now. It's crazy. So every trade has a pro and a con, you know, and you think you know it all until the market punches you in the mouth, and then you realize real quick, oh man, there's some other stuff I should probably learn, and it probably all comes back to risk management and doing strategies that I understand all the interconnectedness, all the pros and cons, and then you stick with those strategies because you can trade a plan, you know? So I'm all about being open-minded, but man, I come back to what works and what I know keeps me comfortable, what helps me sleep, doesn't let me get super, super stressed out and just keep grinding. So all right. Some of you might be joining me late. I've been live since about 2 o'clock. I actually meant to come on at 3 p.m. Time flew by. Plus, I saw the market ripping the way that it did. I saw the breaking news on Trump with the 90-day tariff pause. So I thought we'd go live at 2 p.m. I got a webinar coming up at the top of the hour. So I'm probably going to take a little breather here in the next 9 minutes. If anybody has location looks good on copper, take a shot 1 to 4, 5 risk reward. I mean, possibly. I mean, but here's the deal. It's like, why would copper go straight up? Like, I mean, seriously, right now you still have you still have US and China not coming to terms. Now, this feels like a little bit more leverage is going the US's way. If it is true what we are reading, and that the US is getting all these trade partners coming to the table and asking for some type of deal and asking for some type of terms and asking to blah, 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 whatever. Look, all we're doing right now is delaying tariffs. Doesn't mean we're getting rid of them, you know? So if we are going to say, hey, look, everybody we trade with, we're doing a 10% tariff. Okay, fine. But we saw the numbers that rolled out last week and they were terrible, right? Like they made no sense. We tariff penguins and like uninhabited islands that we supposedly, trade with, but we don't. So it was a weird rollout. You can see the market clearly didn't like it and reacted accordingly. So point is, like, as much as I see copper as like a good opportunity here, it's got to be defined risk, because if it is going, back up to this level or this level, that's fine. But I don't really see the market going this way and this way, right? I see the market going maybe this way up, maybe back down, and then carving out a low, and then copper gets better. But the one overhanging uncertainty right now is China US. I don't know if we're done negotiating. We're clearly not. Like, all we're going to do is tariff and tariff and tariff, reciprocate, retaliate. And until that is resolved, I don't know if the market's truly going to get the benefit of this full-on move. Now, I mean, I could be wrong, but implied volatility on copper is probably still pretty high. Let me check and see over the next, let's say, 48 days. If I just buy and sell, I can risk 125 to make 125. I can risk 225 to make 275. I mean, it's an asymmetric move. I can risk 375 to make 375. If I go just a little bit at the money, maybe it's a little bit more favorable. 125 to make 112, that's garbage. 250 to make 250, that's not great. 350 to make 400, okay, a little bit better. But now we're talking a futures contract that has to get up into like the 4.5 zone. I mean, I can see this recovering back up to like 4.5, maybe 4.78. But I just don't think this is a time to jump right in. So I'm hoping I can survive this trade right here and then possibly put on another trade around the same low and take advantage of that trade. So I'm just going to ride this out for a couple of days, another 15 days on the trade, try to get this thing in that profit trap, take some profit, move on. Okay. But the day continues to go. We're still on. I mean, we're probably getting a 9+% swing intraday now on the S&P. We're at 9.6% low to high. Q's intraday from the low here, 11% intraday. Wow. Nuck and futs, man. All right, what else? Gold, natural gas bouncing up. Okay, fine. Gold. I gotta see something here. S5 FI. Hey, I got it. I'm curious where this reads at the end of the day. This was down to 5% of stocks above the 50-day moving average. Somehow, I think after today, we're going to have a lot of green in the market. What's the current heat map showing us? Current heat map is, green galore, and homepage says 85% of stocks advancing with 12.6 declining. Last week's sell-off on Friday was 87%. Let's check the world today. Okay, world, S&P, very green, 85% of stocks advancing. World, Canada, pretty good. Most of Canada looks pretty green. Ireland, United Kingdom, this is good. Even old China's green today. PDD holdings, not great, down to only 1% though. There's some red, but your big ones, JD's up 6%. I got covered calls at $40. Alibaba, I'm still holding with a covered call around the, what is it? Baba, I think Baidu is the one that I'm getting in. Let me check these real quick. So Baidu's trading at $80. Yeah, this hasn't moved much. It's up on the day, but I've got some collars and positions and covered calls in the like $100 zone. Check those really quickly on Baidu. So shares and covered calls. I mean, these are up 98. I mean, I might as well roll it. I'm up 98.5%. Let me go into an individual count and take a look. So buy collar. So I have a little money left in the put out to April, which is better than closing for red. I've got 110% move on the collar. So if I took this in for 574 and I'm closing out for a little credit, this will help me lower the cost basis overall. Let me see what this is trading for right now. So I can close this for a bonus credit of 55 cents, which helps me lower the cost basis into the low. I think this is low 80s. I already own it. I'm just wondering, do I just hang in there on Baidu? I've got a ratio spread out to September, ratio spread into June. The collar trader shares that I own, I was thinking that this was starting to be like Alibaba, where it's like AI is starting to rip. Um, I mean, I'm up more profit on the collar. It's probably a good thing to protect it. I don't think this is going to get to $100 in the next 8 days. So I'm just going to take this collar off for an extra. Let me see if I get 50 cents on this. Maybe I can, maybe I can't. 50 cents, no. 45 cents credit. That's not bad. All right, so I've got some credit there. That's fine. Baidu, collar, same thing. Close this down for a little bonus credit. 45 cents. Okay, I'll add another collar trade on this one. Baidu, have some shares. There's my collar trade. Those are ratio spreads. So close this down for, see if I get 50 cents out of this one. No. 49 cents, grabbed it. Good. This one has shares. The collar is done. I'm going to put another collar on this one. All right, so let me look at Baidu collar. And honestly, at the lows, I don't know if I need to put a put in. I could probably just sell covered calls. It's already sitting at the lows. I own it in the low 80s. Adding a collar would maybe help, but fundamentally, this thing's like pretty beat up. So this trade's okay. This account, Baidu, this one has a collar trade. So close this one down, see if I can get 50 cents for it. Got 50 cents. Baidu, just some shares. This one has a collar trade. $0.50. Just some shares. Just some shares. This one I don't think has any exposure. This one has a collar. So that collar. All right, 50 cents. Come on. 49, 48. $46. Okay. So collar trades are done. I'm going to take a look at my break even on Baidu. So I have Baidu break even 86.58. 86.58. So right now, if I sell some premium, so Baidu next week, if I sell at 80, that's my break even. We're trading at $80 right now. I mean, I could sell an aggressive dollar covered call and try to collect the income. I don't mind going a little bit further out and say, okay, we got earnings on the 15th of May. Let's go to the week before earnings. My break even's 86 and change. Let's see what these covered calls offer. I might be able to grab a $2-3 covered call and give myself some upside. So if I grab a 95, maybe through earnings, this is probably what I have to do. May 15th, so the 16th takes in earnings. $90 is $2 and change. 95, I might just sell that, try to grab $1,000 and repair it. So if I go 95, I grab $1.36. That's a 19 delta. That'd be some good price appreciation. I get it called away for about, do the math here, that would be 86.58 break even. And get it called away for $1.36. Get it called away for 95. 978 on. So per account I make 978. Let me see how many shares I have total. So 2, 3, 4, 5, 6, 7, 8, 9. 900 shares. Let me do the math on that one more time. Sorry. 8658 minus $1.36. So $8,800 if I get called away at 95 bucks. Question on Baidu is, we're back to these lows at 76. Fundamentally, can it get worse? I would hope not. I mean, that's the risk that I'm taking, is that we have the ability to fill this gap. 95 is some pretty good price appreciation. That's right after earnings. I'm going to go ahead and do that. So that's only 37 days out. A 95 strike gets me $1.30 or so. I'll do this. So let me go into all accounts. Baidu collar. Try to get 47 cents here. $0.46. Okay. So 86.58. I'm just going to go ahead and sell a call for the shares that I have. So this one, I have the shares. I'm going to go out and sell the May 16th 95 for $1.30. See if I can sneak in $1.35 maybe. Filled for $1.35. Good. Okay. This account for Baidu has 150 shares. I will just do fudge. Some of these shares I want to keep for a longer investment, but for 100 shares, I'm just going to go ahead and cover it. So I'll add in. It'd be nice if you can do partial option contracts, but that'll be the day. I'll try to get $1.35 here for one contract. $1.35 filled. This one, $1.50, same thing. Collar's taken away. 95 for this account. 95, $1.35. Filled. Same thing here. This one. Okay, I see something here. 7. Okay, this one I'm going to go out a little bit farther. 95. Let's go for 80 cents. This one has a slightly higher break even. It's just over $90, so I'm going to go a little bit higher on this break even. 95 is okay, but I want to get a little bit of extra profit, so I'm going to go 2 contracts in this one. This one has 230 shares. I'm going to go 2 contracts and try to grab 80 cents. 80 cents. Fill to 81. So that is a 5/16 expiration 100 sell call for 81 cents credit. Break even on that one. All right, final 20 minutes or so. Collar's done. Just one contract in this one for the May 16th, 95. It's getting at $1.35. Let's see if I can get $1.35 still. I'm losing a couple cents on the premium, $1.32. Okay, this one just has partial shares. This one just has partial shares. This one for 100. Filled for $1.30. Partial shares, no shares, and partial shares. Okay, 95, $1.29. Okay, so let me update this now. Added a 5/16 expiration, 95 sell call for $1.30 credit. So my highest break even was around 86.62 minus $1.30 down to 85. 85.32. All right, so 85.32 is my break even. Gets called away at 95. 8,700 bucks on Baidu. I'd like to keep it out of the way. I'd like to keep rolling it. At this point, I don't care. I'll take the $8,000. I'll move on, add it, beef up. Let's go, make some profits, move on, repair, and just keep grinding. All right. I agree with that. Yeah, William, for TradingView. Every like they do like a June, July TradingView special. It's like a Black Friday in July or whatever. Usually save like 50 to 70%. I have it a TradingView affiliate link that I post every year in my Discord. If you're not a subscriber, I mean, I've logged so many like Black Friday deals in TradingView that I don't think I've ever paid for a full subscription. And I've got Pro Plus, and I added the live futures feed and stuff like that. So my feed probably cost me $200 or $300 a year. Will this continue moving forward the next day or two? I don't know, man. I mean, I do think this is a big relief for the market. I really do. This is not something I want to. I don't want to fight or fade this, to be honest. Like if I'm gonna fade, here's what I'm gonna fade. I'll be real honest. Like I've got a crash insurance class on Thursday that I'm gonna do a video for because I will be like remote and traveling and I'll be driving to. I got a 3-hour drive on Thursday. But I don't think I'm ready to start reapplying hedges. If I'm going to hedge, I don't want to fight this move immediately. I mean, because here's why. If I put in a hedge right now because I'm like, oh, this market is going to be toast. Look, we just gave the entire world a relief rally. The entire world. US and China, they'll figure it out. They're the makers, we're the buyers. They're going to figure it out. It's going to be there's going to be lots of contention. It's going to be, adversarial, but they'll figure it out. But the whole world got a relief today. So that's not something that you want to fade. If there's more to this, then I can see this market coming all the way back into where this whole tariff tantrum started, between this 5,500 zone and this 5,700 zone. Then I would say if the VIX is lower, and it is affordable and asymmetric to take a hedge, then I will reapply my hedges in here. And that'll be another maybe a 0.25 to 0.5% risk. If it goes back down to the lows, fantastic. And I'll try to get something that lines up like 4 or 5 to 1, maybe better. I'll see what that looks like. Right. But this is not something I want to fade, because if all we do is we have this big rip today and we have a little pause or pullback, do not be surprised just based on some just straight up fib behavior. A low to high, a pullback of like 30, 38, 50% is going to be bid up again to revisit the highs or higher, right? Or this is a pause and a bull flag and it just keeps going. And this is just a full on squeeze rally that's like, yeah, it probably should stop there, but it may not. So whatever I do to fade this is going to be very small risk, because I have hedges that are still running from here and here that I took some profit at that point and I took some profit at this point, but I'm still running with trades out to August and September in case we revisit these lows or go lower. Like, there's still so much to happen in the markets this year. This Trump stuff and this tariff stuff, well, it looks like it's kind of resolved, right? It looks a lot better now than it did the last couple of days. It's not done, but now the next big thing for the US markets is going to be earnings, right? I'm sure that the earnings report can be a little bit happier, a little bit rosier, because now we've got 90-day pauses. It gives companies a big enough window to figure out how they can, have their put their best foot forward. It's like 90 days gives you a chance to have the right inventories, put the right processes in place to be as profitable as possible. Whatever that looks like. Inflation data tomorrow. If it's better, maybe the Fed's looking to still cut, 3-4 times this year. That's probably good and encouraging. But we didn't need a Fed put. That's kind of nice. I think that you kind of say this is the Trump put / the Trump flinch. That's what today was. But wild times equals wilder reactions. For every action, there's a reaction. And my gosh, I mean, I am I am happy that overall it's like, yep, survive the week, make some money, have a big swing in P&L. And this is what I've been fighting for the last couple of weeks, is just taking my stabs, selling some premium, taking some good risk-defying trades. And now I look to see if we can just hold the line for a couple of weeks and just don't shit this thing back down, then I'll be okay. And there will be probably higher highs in our portfolio way before we even get back to that 200 moving average, or even way before we have another continuation to the upside. But I still need some time, and I need IV to settle down, because that's what's been the biggest P&L fluctuation for me, is having all this IV expanding so rapidly over a 2-3 week window. Okay. All right. So that being said, everybody, I've got a webinar here in 15 minutes, and then I'm heading to the airport, flying out today. I will be in Atlanta tomorrow. I will still be on in the morning. I should be on in the morning as planned, and try not to have as many disruptions. I may do some videos instead of doing like live YouTube tomorrow. I'll be driving. I'll be on the road for 3 hours or so. So I'll probably just post a video and premiere it at 3 p.m. for my final hour. My crash class, I'm just going to do a video, because I'm not going to hedge yet. I'm not going to hedge. We talked about it last week on Thursday. We put on a hedge. We closed out 2 winners this week from last Friday. Closed out a hedge yesterday and today. So we took some winners there, which is totally fine. Obviously, I'm glad that I did, because those would be pretty much worthless if we experience this 8%, 9% move to the upside today. But I'm ready to reapply some hedges for cheap asymmetry and high reward to risk. But I just don't think this is the spot. I don't want to fight or fade this move. Okay. All right. And if you're wanting to step into my 4 o'clock webinar, I'll be live at 4 o'clock talking about Waterfall Income, which is another service that just continues to hit some nice winners. We had 2 trades on Monday, closed out for winners today: 46.15%, 47.32% return on risk today. Took the trade Monday, closed out for nearly 50% winners. Happy with that. Good trades. Okay, and then we have a couple more positions running on XSP out to May. We got 1 trade that maybe, if we're lucky, if we get another big fat rip to the upside, XSP possibly possibly knocking on the doors to the 550 handle, taking less risk on the trade. I've got a 560 line. 558 is my break even. So it's not that far away, but there's a chart alarm. And holy smokes, if we get there, like I hate to say it, but I'm gladly going to take a loss If I'm under like just a few $100, I'll gladly take a loss because I've been down about $2,000 on that trade. So we'll see if we get this thing just continue to rip higher. The encouraging thing is look at where this gap is. This gap right here, this market could be so excited. Is it Pointer Sisters? I'm so excited and I just can't hide it. It could be so excited that this market is going to find this gap as well. And for the 411 expiration I have for my Waterfall income service, the 560 strike, if we get to 558, we're break even. We get to 559, we're profit. We get to 560, we're full profit with a profit trap. It is doable. It is doable because now we are only what percent away? We need another 2%. Well, the market just did 10%. Can we get 2%? It'd be nice if we do. But either way, we're still mitigating some of the risk. So off we go. All right. And then the other expiration's out to April, May, but everything's looking pretty darn good. All right. I'll let you go. 4 o'clock webinar, and I'll see you tomorrow. Thanks. Bye.